Welcome to this video. In this video, I'm going to be making a Sandisk Corporation stock analysis. Now, as you can see, this stock isn't really that old as this dinosaur right here represents because we had an IPO on the 13th of February last year. Now, you might know Sandisk, the name, because of course it isn't a new company. It used to be part of what is called Western Digital, and it was spun off. And the reason for this huge explosion is of course because of the SSDs. And of course, SanDisk produces these, and they just memory cards that look like this, and you can get them in tons of varieties. But you need these for data centers, and SanDisk is by far the best pure play SSD or memory company in the fucking world. Now, something you should notice, even though it might look very expensive at this price point right here, 377 USD, there isn't really that many shares afloat. So this of course means this price has to be divided on less shares. Now, an example is, let's take Palantir for example. We have $2.18 billion shares afloat. Now, I know this company is also quite a lot bigger, almost 10 times the size, but overall, just remember there is a much larger amount of shares also in Palantir than there is in Sandisk. Now, if we take a look at the stock itself, we can see that the RSI is quite nice. Ever since it started exploding, we can see that in the upper RSI, we spent quite a lot of time up here in the overbought. We saw this, we were actually sitting on a shelf for a while, and the stock price also doubled, so of course it makes quite a lot of sense. Now, if you don't know what RSI is, that is the relative strength index. This means which momentum a stock has. So if it's up here above 70, that means it's usually overbought, or also it means it rises rapidly. Now, does this mean it's going to fall in the future? Not necessarily. As we can see right here, we are in the upper RSI. We're actually all the way up in 92. That is extremely high, as the top is 100. But still, then again, we're only trading at 85 bucks, and currently we are in 377. This only means the stock price is rising rapidly, and it's most often than not, it is more volatile on this price point, or not this price point, but at this RSI point. Now, if we're below 70 up here, we're just in the upper RSI normally. This means we're in an upwards tendency. If we're below 50 down here, but above 30, we are in the lower RSI like we are right here. This means there are more sellers and shorters in the market. And if we're down here below 30, that means we're being oversold. And then again, just like overbought, meaning it falls rapidly. This doesn't mean it can't fall further, but just means it is falling rapidly, like we can see right here. And we are in the low RSI here, and then in the oversold stage. Now, the earnings are quite decent. As you can see, we have surprised positively each 4 times right here. Now, this company is relatively small as we only have a market cap of $409 billion, but the beta is relatively high at 2.30, meaning it is 130% more volatile than the average index, but still, I don't think it's going to be a problem, as we even see right around here. As you can see, Sandisk is maintained and outperformed by Miso, so it really is quite a great company, and I do think within a year it's going to be 500, maybe even 600 bucks. Now, if we look at the earnings, we can see right around here, they're still losing a bit of money, but then again, that doesn't really make that much difference, as of course we need SSDs in the future. Now, something interesting is, of course, we don't have a PE because we don't make money, so we can't have earnings, but we do have sales. And at 6.4 price to sales, that is quite decent for a company that would seem so expensive. So still, I do think we have time to run on this stock. Now, they have $1.5 billion in debt, but they also have $1.44 billion in cash. So to be honest, it really isn't that much of a problem. And you can also just see it is a huge company with 11,000 employees. Now, it says it was founded in 2024, but of course, this is because that is when it was spun out, and then it was publicly launched in February of last year. Now, revenue, we can see how do they make the money. That is in client, consumer, and cloud. So client right here, that is companies like Nvidia, Google, Meta, who need it for data centers. Then we have consumer, that is people like you and me, who maybe need to buy a new computer or an external hard drive. And also cloud, this is when they're selling for their clouding division. And we can also see where are the largest. That is in China and the United States. Of course, these are also two of the main AI hubs in the world. So of course, that makes a lot of sense, and this is only going to increase in the United States and China. Hopefully, we can also see Europe moving up a bit, or even just being Europe itself instead of Europe, Middle East, and Africa, because Europe itself really needs to step up their AI game. Now, if we go down to see the seasonals, of course, we can see currently it is up 577%, which is insanely high, of course, for last year. But then again, still, I do think we have a lot of way to go until we are actually fairly priced. Which personally, as I said, I think fairly price is between 450 to 600, because of course we need quite a high leeway because it is relatively new. So we don't. It is much harder to make a educated guess because it is such a new company, and we are still in quite a memory and AI craze. Now the technicals for the stock, as you can see, for the day it's a strong buy, for the week it is a strong buy, and for the month it is a strong buy as well. So overall, the technicals say you should just actually be buying this stock right now. I have to say I don't own any stock right now, but that is because I have other positions, which means if I bought Sandisk, my overall explanations towards the AI would just be way too high. So I'm not buying it right now, but I do like the company quite a lot. Now the analyst rating are also quite nice. We have 14 strong buy, 2 buy, 6 hold, and 1 strong sell. So even though the average rating is a buy, the average price is actually down by 21.5%. Now personally, I do think this is a bit wrong because this is the best pure memory play in the whole world, in my opinion. And also just look at this. Their estimates make so much more money. So just to be honest, I think they're gonna be swimming in cash, and I think this company is gonna be worth so much more. Just take a look at last year. Estimate $2.7 per share. 2029, $30.8 per share. That is absolutely insane. Just look at the revenue as well. I mean, just rising and rising and rising. But also the fact that the revenue is rising so little compared to the EPS, meaning they're estimating to get their costs down by a ton, which is actually better than increasing the revenue because this means they're going to streamline their operations. So that is also why I like this company quite a lot. So personally, within 2 to 3 years, $400 easily, $450 easily. That is at least my opinion and my analysis, which has led me to this. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see more videos like this, please don't forget to leave the company terms analyzed in the comment section below.